What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Linder. This show gives you a natural and honest analysis of Bitcoin and macro. Things are changing all around us. You know, the international financial system and monetary system and the geopolitical order of the world. Everything is changing under our feet right now, and so that's why we're here is to maybe see if we can get a better understanding of what is going on and forecasting the future. So that's why we are all here. Today, I'm just going to go through some charts, go through Ethereum and the Brian Armstrong kind of pivot that we're seeing out there. And then finally talk about or listen to the speech this morning from President Biden, what he said about, tanks going to Ukraine. And I think that the tank part is not necessarily the important thing. I kind of picked out another part here that I wanted to talk about. And then I have one other clip that's from a European politician. And so that will show that this type of, I guess, maybe desperation is shared on both sides of the Atlantic. So I think that's very important to notice. Okay, so that's what we're going to do today. Put out a bunch of posts this morning. Let me actually refresh this tab. So I got the most latest live streams out on the podcast apps. I also noticed some dead links in the podcast apps, like Stitcher, for example, was that some reason the connection died between my host and Stitcher, so I fixed that. Hopefully that will bring a few more listeners in. And also I set up the auto post feature to the new YouTube channel. So the YouTube channel right now, where I'm live streaming right now on the new YouTube channel, that's BTC Market Update. It's now hooked up to get the podcast version, auto posted as well. So hopefully we'll drive some more traffic to the YouTube and pump those numbers up a little bit. All right. So, so that was this one right here, episode 305 that you're seeing on the screen was Monday's, and then yesterday's is going to come out this evening. So I got both of those put up and they're ready to go. All right. Let's take a look at some charts. So here is Bitcoin, the daily chart. I did post that to Telegram for you guys over there on Telegram. And you can see we are kind of falling out of this bull flag. If we bring up RSI, this is the thing I've been talking about for quite a while. RSI hit a very, very high reading of 89 on a daily, and it is coming down. I want to see it, get out of overbought territory, so breaking 70, at least touching 70, before we can continue higher. So that's why I have been expecting some sort of a correction. And what we're seeing right now, 22,500. So it is down slightly, falling out of this bull flag. If I go to the 4-hour chart, you can see that a little bit better. Also a bear div on the 4-hour chart. So you can see that there. But you can see this flag much better on the 4-hour. Fell out of this formation, kind of tested back on it, and now we are going lower here still. Okay, let's take a look while we're in crypto, in the Bitcoin space. Let's look at Ethereum. Haven't done this on the show in a very long time. Posted that to Telegram as well. But I wanted to show this because, the ultrasound money thing, it's going to end up killing Ethereum, but it's more like it's put a fatal wound on Ethereum, and it's just going to bleed out. I don't think it's going to crash through the floor immediately, but without the inflation that they have had, because Ethereum has had very high inflation relative to Bitcoin. they're not going to be able to continue growing and having all of these use cases, these marketing narratives on top of Ethereum. So I think Ethereum is just going to bleed out. There's just not going to be any real impetus behind it. Also, there is a thing about Ripple. The lawsuit, the SEC's lawsuit against Ripple, is supposedly coming to an end here very shortly, and that can affect other coins. But anyway, this was interesting. I have on here the merge, where Ethereum hit the merge, and actually, let me get to this price range. So you can see since the merge, Ethereum now is down 15%. That is, it's continuing to fall. So this should bleed out, and I don't know, maybe we can get down to 0.5. Let's see, where would that be? If we just visited the lows here that from last June, we'd be all the way down to 0.5, or sorry, 0.05. But yeah, that is with the ultrasound money meme. So whatever, Ethereum is kind of a dead project. Okay, let's get into some other macro stuff. Let's take a look at the stock market. Slightly green on the day actually now, after starting way low, gapping lower, and looking like it was not going to maintain this breakout of the trend line and of the 200-day. Let me bring the EMAs up here. So the golden cross is approaching. The 200-day, it broke the 200-day again this morning, but now it is green on the day. This is a very resilient market, even though, I mean, there are so many people out there. I mean, pretty much without fail, every single commentator that I've seen in macro are saying that a recession is coming, the stock market's going to sell off 25%, Unlikely. That is unlikely. Just look at how strong this is, holding above the 200-day, with the golden cross incoming, breaking the trend. Even with some of the things like, what was it, Microsoft last night announcing earnings, and they actually were decent earnings, but then what they said in the shareholder call was they were quote unquote cautious about the future. And so that cautious term made the market sell off overnight. But anyway, it looks like it's green on the day for today, the S&P 500. Probably not the same with the NASDAQ. Let's take a look at the NASDAQ. This is actually NASDAQ mini futures, and it is still red over the last, when did this open? This is futures, so it's open overnight. So it is still red since the overnight, but, not, here we go. It is green on this morning. Okay, let's take a look at oil. I've been talking about oil, of course, a lot here on the show. If you guys are new to the show, watching on YouTube or Twitter, I do all sorts of macro, not just Bitcoin. This was the first Bitcoin macro podcast. Back in 2016, I started it from a Austrian economics perspective, so a sound money perspective, and I've always done more macro since my degree is in economics and I have another degree in business, that I've always looked at the macro situation. So this was the first Bitcoin macro podcast. I look at all markets. This is oil here. I've been calling for oil to be relatively weak. When everybody was saying we're going to $200 a barrel, calling for oil to be relatively weak. And it is having trouble with this level at about $80, $82 a barrel. Got rejected off some headlines about the last week was the biggest crude inventory build since like 2019 or something like that. So this is a pretty big deal. And as we go forward into global recession, and as China's opening is seen as a dud, I mean, the demand for oil going forward is going to decrease in the future. And I'll say this again, so because I've heard a few people say similar things except opposite. they they pull out the number 100 million barrels a day because that is roughly the global demand for oil. 2019, so pre-COVID, it was at 102. So we're still below where we were pre-COVID. And I expect over the next, say, 5 years, that could get down to 95, maybe, or 90. I don't know. Probably not have a substantial drop, but if we're dropping like that, that's the demand for oil in the world. And at the same time, we're having marginal increases in the ability to extract oil. So like the shale revolution, there's every year they come up maybe with a 1 or 2% efficiency gain in these industries, and so oil becomes 1 or 2% cheaper to pull out of the ground. They also find more and more deposits every year. So the it's just getting cheaper to produce, while at the same time demand is going down. So I expect the price of oil to, over the next 5 to 10 years, to have a difficult time rallying very hard. I mean, even if we pull back, let's go to a monthly chart, and you can see that back in the great financial crisis, the high was all the way up here at 145, and the high, even in with COVID, with all the supply chain disruptions, and the first war in Europe since World War II, major war. This was this is, I guess you had Yugoslavia and stuff, but this is a major war with major powers involved. This is a Russia NATO war right here, and oil only got up to 130. Something's weird about that. When they put sanctions on Russian oil and energy. So, yeah, it's very surprising when you look at the state of the world right now, and oil's only at 80. It doesn't make any sense unless you can say that demand just isn't there. And a lot of people are betting that this China reopening is going to be hugely positive for the price of oil, but it's not, because China is slipping into recession just like everybody else. China isn't going to save the world. China is actually going to be one of the worst hit economies in this coming recession. All right, so that is oil. Let's take a look at the US 10-year. And I usually do this with the 2-year as well. So I'm going to pull up the 2-year and the Fed funds target ranges. This is the upper and lower bound of the Fed funds target. And let me go back to the daily so it's easier to see. And the 2-year and 10-year are both under the Fed funds target range. The 10-year is dramatically below. It is coming in this morning at 3.46%, and the bottom of the Fed funds target range is 2.25. If the Fed next week raises to the bottom of their range to 4.5, yet every single interest rate isn't obeying them, what would you say you do here, Fed? They're not in charge. They're not in charge of interest rates. But when people talk about, oh, it's artificially low, we've had artificially low interest rates for so many years. I mean, does this look like the Fed is in control? Does this chart scream out to you that the Fed can keep interest rates low, artificially low, for longer? No, they're not in control. They can psychologically damage the market, like they tell people, hey, we're going to have really loose policy. So that's going to help the market. And so people act a little bit different. It psychologically affects people to think that the Fed has their back. But this is not a mechanical way that the Fed has artificially lowered interest rates and now they're artificially hiking interest rates. They are not in control mechanically. The market is a sucker. The market is a sucker. They believe the Fed. They believe in the Fed mythology. That's what moves the market, is the religious belief of the market. As long as that belief is within the bounds of reality, You can't believe that solar energy is as efficient as nuclear, okay? Because that is outside the bounds of reality. But as long as you stay within reality, you can have any sort of narrative you want, especially if it's being pumped up by a religious power, like the Fed or the government. These are religious institutions. So anyway, this is now they're going against reality. It doesn't matter if the Fed raises 25 basis points next week. The market is going down. Okay? Rates are going down. And what is also interesting about this is that it is fairly steady here. So December and into January now, the 10-year has been about 3.5%. This is kind of its happy place right here in the chart. And a lot of people are, saying, oh, we're going into a deep, deep, dark recession. I would expect the 10-year to be way lower than this. I would expect the 10-year to be on a consistent downward trend, not semi-flat for the last 2 or 3 months. So it's interesting that the rates are low, but they are not diving. So anyway, that's just a little kind of nuanced take here. What else? Other charts do we have? The dollar been waiting and waiting for this to bounce. I still think it's going to bounce here, guys. It's having a hard time going lower, so we will see what comes of this. But a rising dollar over the next, say, 6 months, a general easy, slow rise in the dollar is not going to be damaging necessarily to the market. It's going to fluctuate. So actually, let's go back. Let's go to the weekly. And I mean, these kind of trends last for a long time. So you can see 2017, even though this is a strong dollar era, okay, since the great financial crisis, if we go back here to all the way back to the great financial crisis. Oh, I got this arrow thing on here. You can see that it has generally trended upward. Nice and steady. But then we do have periods, like here's a period in 2014 into 2015. Let me highlight this in red or whatever. This period saw a very rapid acceleration, dollar wrecking ball. Okay, and that is what we have seen here recently as well. We saw this about 1 year, a little bit over a year of a dollar wrecking ball this way. And what happened after this dollar wrecking ball back in 2014-15? We had a fluctuation in prices. It entered a range, and it just bounced back and forth in this range before next dollar wrecking ball. So that's what I expect to happen up here as well. And this is mainly for the guys that are new to my content, because the guys that are here on a daily basis, you guys know all this stuff. But I kind of expect this type of thing until the next dollar wrecking ball goes up, in several years' time. So that's what I'm waiting for. I'm waiting for a bounce. And we will see, because remember, the DXY is measured against other currencies, mainly against the euro. So this fall means that the euro is strengthening. But anyway, okay, that's all the macro charts. What else do I have here? Let's talk quickly about the Ethereum thing. Or sorry, Brian Armstrong thing. So I'm going to share this tab. Let me make sure you guys are seeing that. Okay, so this is interesting what Brian Armstrong has been tweeting. He has done a 180 here. So Brian Armstrong, just some kind of perspective on Brian Armstrong. I've been around for a long time, and I remember Coinbase. I might even remember it being launched or something. I don't know, but I did use it way early on. And these guys were kind of in this Silicon Valley kind of crypto anarchist vibe. And then they started going down the shitcoin casino route. And then Brian Armstrong got in early in Ethereum, and he pumped this altcoin ecosystem. He held, probably still holds, much more Ethereum than he does Bitcoin, even though he was in early in Bitcoin as well. So he really turned this into a shitcoin casino. And he didn't even mention Bitcoin for years. And Bitcoin is what gave him his start. Bitcoin is also what props up his entire business model. I think even this was just a couple years ago, maybe. They're saying like a lot of their volume is still, Bitcoin was still 50% of their volume, even though they had turned into having many, many coins. They did this basket where you could invest in a basket of cryptos. And they also had education that was faulty. I mean, it was downright wrong. It was false education that they pumped out there to people about blockchain and about all these altcoins and NFTs. So Coinbase has been a detrimental influence on the ecosystem, for sure, for sure. And Brian Armstrong is right at the center of this. And he very, very rarely ever says the word Bitcoin. It's always crypto. He'll say Ethereum, but he won't say the word Bitcoin. So it's very interesting here. Back on the 22nd, he said, when Brazil and Argentina were talking about a common currency, and I talked about that yesterday, I believe, he says, wonder if they would consider moving to Bitcoin. That would probably be the right long-term bet. Very interesting, he said Bitcoin instead of crypto, because that would be his MO. And then the very next tweet, he's responding to a big scammer in the space. He said, this is a bullish case for Bitcoin. So why the pivot? Well, some people on Telegram, on my Telegram, have suggested that this is due to Ripple and the Ripple case coming out, and perhaps Brian Armstrong knows that he's going to have to change his business model, or he's in trouble. His current business model is in trouble. And so they're going to try to pivot maybe back to more Bitcoin. Maybe they're trying to become, get Bitcoin maximalists on his side again. I saw that the 3 Arrows Capital guys are trying to be Bitcoin maxis now, or play Bitcoin maximalists in real life or whatever. Maybe Brian Armstrong's doing the same thing. I don't know. I'd be interested to know what you guys think. If you're on YouTube, put your thoughts in the comments. On Twitter, you can respond to this tweet and let me know what you think is going on here with Brian Armstrong. Telegram guys, same thing. Let me know what you think. All right. So that is Brian Armstrong. Let's go to this video now. So this was Biden just this morning, and he's talking about, let me make sure this tab is coming through. Okay. So he's talking about sending tanks to Ukraine. We kind of all knew the timing's interesting because there's some breakthroughs happening on the front lines, and perhaps not only is this to actually help the Ukrainians fight the war, prosecute the war, but it could be to steal some of the headlines from some of the breakthroughs on the front lines. So that it's interesting timing here. Maybe they're trying to get ahead of some bad press that's about to be coming out about the front lines in the Donbass. But okay, let's listen to what he says here, and I'll point out what I think is interesting as he's saying this. So I think we're set up. Yeah. Let's play.
Stood together. The United States has worked in lockstep with our allies and partners around the world to make sure the Ukrainian people are in the strongest possible position to defend their nation, their families, and against the truly brutal aggression of Russia. I haven't seen the likes of this in a long time. The United States and Europe are fully united. This morning, I had a long conversation with...
Fully united. Okay, let's keep going.
Our NATO allies, German Chancellor Scholz, French President Macron, Prime Minister Sunak, and the Italian Prime Minister Meloni, to continue our close coordination and our full support of Ukraine. Because you all know, I've been saying this for a long time, the expectation on the part of Russia is we're going to break up. we're not going to stay united, but we are fully, thoroughly, totally united. Ukrainian forces are working.
Okay, that's about it. I just wanted to point out that he doth protest too much. What is that Shakespeare line? I think you protest too much. He is trying to convince us that they are united. We are so united. We're so united. We've seen a lot of stuff between Poland and Germany recently. So are there more fractures in this alliance than they want to admit? Also, Turkey, a member of NATO, has now said they're not going to allow Finland and Sweden into NATO. Even though they said okay first, now they're saying no. So there are some fractures appearing here in this alliance, and now we hear Biden getting on TV and saying we are 100% united. There's no problems whatsoever. And you know, every relationship has problems. Every single relationship has problems and disagreements. And to come out and say there are no disagreements, we're 100% united, then you know that's a lie. You know that's a lie. Okay, the other one I wanted to show you guys was a defense minister. No idea what her name is. Oh, it's the German foreign minister Baerbock. So let's listen. Okay. All right. Play.
And therefore, I've said already in the last days, yes, we have to do more to defend Ukraine. Yes.
Oh, come on.
We have to do more also on tanks. But the most important and the crucial part is that we do it together and that we do not do the blame game in Europe, because we are fighting a war against Russia and not against each other. Thank you.
Okay, a couple things about that. Yeah, it's very, very important. It's more important than anything she's talking about. It's more important than tanks. It's more important than really the support of Ukraine. It's that we support them together and that we don't do a blame game and that we stick together. So this is from both sides of the Atlantic now. They are really going towards this. We are united. We are united. And what is one of the things that I have said repeatedly over the last 6 months or so is that international cooperation is breaking down. International unity, international organizations, trust out there, it's breaking down. Globalization is breaking down, and that includes big global things, globe-spanning things like NATO. So that's all I have for today. I'm going to open up the mic now for guys over there on Telegram. If you have any questions or comments, now is your time. Raise your hand, and I will bring you in. Okay, we got two. I'm going to go with RB first. Okay, RB, you have to unmute yourself, but before you go, I'm just going to tell the guys that on YouTube and Twitter, I will relay your comments because they're not going to be able to hear you. So, okay, what's up, man? Okay, great question. Where does the money come from that we're sending for aid over to Ukraine, and where is that going? I don't know exactly, but I've heard that it's like $3 to $5 billion per month just to pay the budget of Ukraine, the government of Ukraine. So, we're paying. Basically, the United States is paying the bureaucrats over there. Is paying Zelensky's salary, literally paying his salary, and so and all of the salary of the troops. They're paying for all of this stuff over there. Just $3 to $5 billion a month just to keep the lights on in the government buildings, So that's part of it. Part of it is going to defense companies to pay the defense company so that they can send over their armored vehicles, their rockets, their artillery pieces, the actual munitions, whatever. So some of that is going to global and U.S. defense companies. So that's part of it as well. And where is it coming from? It's coming from the U.S. budget. It's kind of a rounding error for the U.S. budget. So, they've passed that through the Congress and stuff like that. So now sending these tanks, sending individual pieces of equipment like this, this can be unilaterally, Biden can do this. Unfortunately, unilaterally, Biden can send over these things. I didn't think that they were going to send them over. One of the things about the U.S. tanks is they're not well suited for this part of the world, and they are complex. There's a lot of, more moving parts. So if you compare like a Soviet tank to a U.S. tank, the U.S. tank is, comfortable and has lots of different little widgets, where a Russian or Soviet tank, has fewer parts, fewer moving parts that can break. So sending the U.S. tanks and even German tanks over there are it's not the best decision, because it's going to be hard to keep them up, maintained and battle ready. So anyway, I hope that answers some of your question. Yeah. Well, they are creating some new products, like they're cranking out ammunition, big artillery shells and all this kind of thing. But I don't think it's really new loans. It's not new money being printed, because it's just, the government borrows that money. And so, yeah, it's just part of government spending. Yes, sir. Okay, KL, did you want to jump in here? All right, man, you just got to unmute yourself and come on in. Yes, gotcha. What's the ticker for those? It's a Fed funds upper limit and Fed funds lower limit. If you just search for those on TradingView, you'll find them. Yep. Quantitative tightening being stopped this coming November? Well, I don't know much about that, it being stopped in November. I didn't see a headline for that. But what I would say about in general about QT is it's almost the exact opposite of what the experts say. So like QE is supposed to be stimulus, where they pump out liquidity into the market. It's actually not. It actually is like an anchor on the economy. And QT is supposed to be like withdrawing liquidity somehow, and that's not the case either. As we saw with the 2-year auction yesterday that I talked about, it was at a record high bid to cover ratio, almost 3 times as many bids as there was actual 2-year treasuries to buy. So and that's with QT, so not artificially, quote unquote, artificially boosted by the Fed bidding. So QT is, I think, allowing the market to actually recover a little bit. So, yeah. So as the economy is slowing, does that mean that credit creation is slowing? No, I see it. I see it pretty stable. Let me pull up a chart here. So this would be the 5 year 5 year forward from Fred, and I'll share this with the guys here. This is the gold standard or Bitcoin standard for inflation expectation. I'll share this tab here. As yeah, yeah, you can send it to me on a DM on Telegram. That'd be fine, or on a DM on Twitter. We're in it right now, so it's this. Oh, okay. Well, you can't you just click on my avatar and send it to me that way? Send a message. Let's see. Yeah, you can do it that way. Send a message that way. Let me see. All right, I just sent you a message. I sent you a message so you can respond to that. All right, so I added the link to Telegram about the 5 year forward. And to answer the question about is loan, are people expecting loans to slow down as the global economy goes into recession? Well, if we take a look at this, the 5 year forward, this is inflation expectations. And in a credit-based system that we have today, credit is inflation, is growth. They're all equal to each other. And what we see here by this chart is it's been fairly consistent, about 2 to 2.5%. There is no massive slowdown right now in expectations for like credit growth. So I hope that makes sense. Awesome. Well, thanks for joining. And are you new to the Telegram? Absolutely. Ap- awesome. Yeah. Yeah, I just sent you a DM here on Telegram. My name is Ansel Lindner, and you should see it as that, or you can see it as Bitcoin and Markets. Okay, sounds good. Okay. Yes, sir. Okay, guys. That's going to wrap it up for today. Thanks for joining me. Don't forget to subscribe on YouTube at BTC Market Updates. I have a Rumble channel too. Just search for Bitcoin and Markets. And follow on Twitter, join the Telegram, all of that stuff. Anyway, thanks for joining, guys, and I will check you on the next one. Bye. Oh, no. All right.